Hello traders, and welcome back to Vertex Investing. I'm Tans here, and again I just want to take a moment to appreciate everyone who likes and subscribes our videos, interacts with us daily, let us know how you're getting on and so on. I just want to take a moment just to appreciate, helping grow Vertex to what it is. I mean, when myself and Ben and I think that's the correct English, when we started Vertex, we didn't expect to be at the level that we are now, with how the community has grown, how our social presence has grown. Everything about Vertex has just exploded, and it's a lot quicker than I ever expected. And I just want to say thank you for making that happen. Before I go on with what the actual purpose of the video is, a question that was raised was about smart money concepts. Will it ever stop working? Now the thing is, smart money concepts and Wyckoff has always been around. It's been used in the markets for God knows how many years. All right, it's not a new concept. It's not a new thing. And what it is, recently there's been a huge hype, right? And I think this increased hype of smart money has sort of scared people, thinking that it's gonna stop working, right? But thing is, in terms of, especially what I'm speaking about in this video, in terms of things like liquidity, smart money traders are also being targeted, right? It just works exactly the same. And I think with this increased hype of smart money, I don't know if hype is the right word to use here, but with this like increased social presence, I'll say, of smart money, people are starting to get scared, thinking it's going to stop working. But the thing is, like, without that hype, without that that social presence from like teams such as RC Visionaries, WWA, my mentor Rise Precision, without teams like this, without them creating that social influence, I wouldn't be in the position that I'm in now. I mean, I would have been doing my standard strategy, getting a 1 to 4 very consistently. To be fair, like I was doing before I started smart money, I was using a mechanical method, as I mentioned in one of the podcasts, and I was doing that for 4 years. Yeah, about 4 years I was doing it, and I was doing 10 to 30% a month average. So I was getting on just fine. But when I started smart money, everything like switched for me. But the only way that I found out about it was because of this increase of this social presence of smart money that was going around everywhere, which opened my eyes. And as soon as I learnt it, everything changed. The way I see the markets, the way I approach it is very, very different, because everything now just makes sense. And which is why, however, I still cannot let go of the rule-based method, which is why I've made my own interpretation of what I've learned from various schools of thought. So I just want to say, like, don't worry too much, and it's not a bad thing about the hype. I think some people like try to cause competition between mentors and so on, but to me, I don't really care. For me, I like to interact with as many traders as possible. I try to reach out to as many trade teams. If they want to get involved, if they want to team up or anything, I'm always open. I mean, so for me, I don't really see that competition side of things. Although we are a business, but I'm not the best businessman, to be fair. I just want to provide as much value as I can to as many traders as I can. And the main thing is, for our students, is I want to provide them that support and guidance that I didn't have when I first started, and I wish I did, because I've made so many mistakes. And hopefully, my whole purpose of being a mentor is for people to learn from my mistakes. And as I said, I've said some of my mistakes in these 3 videos, and hopefully you guys take this on board, so you don't replicate the mistakes that I made, because I've made the mistakes for you guys. You guys don't have to make those same errors. But obviously you don't learn if you don't make mistakes, right? I learn every single day. Actually, to be fair, one of the learning points is I took a GU short. Where was it? It was somewhere. To be fair, it was a stupid trade. Where was it? Yeah, somewhere here. Yeah. If you saw our story, I had an entry point right there, right, and it was a really really good entry, but it was a stupid trade. Why? If to be fair, I did get a good move from there to there, very tight. It had pretty much no drawdown. But the main issue was I'd never traded this time, so I did sort of break my rules. I don't know why. To be fair, that was the only trade I took uh, this week, and I think I just wanted to be involved. I don't know. I don't normally look at the charts that late, but yeah, that was a stupid trade for me. And that's a mistake that I've learned from. I've done it before, but I know I've done it before. But the main thing is I'm learning from this mistake, and I won't do it again. I know I said it. I probably said it last time I did it, but I can't remember the last time I've done it, and that just shows that I can't even remember the last time I did that, and it's probably a good few years ago. So although I've broken my rules, I've still, I maintained it up until that point. I don't know why I did that. I was not under no pressure at all to take the trade. That I think I just wanted to be involved. I had a 0 trade week, to be fair, but as I mentioned, I'm not overly trading at the moment. Hopefully, I should be back to my normal style. But yeah, that was one of the things. But that wasn't the point of this video anyway. But as I'm talking about it, is making a note of you will make mistakes along the way, and the main thing is just write. Like for example, I took this loss, right, and I don't journal anymore, which probably sounds quite bad, but it's been 5 almost 6 years, and for me, I reflect on the trade as soon as it closes, whether it loses or wins. I reflect on it straight away, and if there's anything that I need to work on, I will write it down. If it's like a stupid error, or if it's something I'm proud of, I accept it there and then move on to the next one. Whereas when I first started, I used to document every single thing. I used to document my psychology. I used to document I used to document how I felt when the trade was playing out. I documented my errors and I highlighted them, so just to make sure I don't do the same things again. And that's what aided my development and boosted it, because I already highlighted, for example, if I woke up feeling tired one day, I had a note that don't trade that day because I'm not 100%. And by doing that, I've increased my win rate massively. Win rate isn't just about the strategy, it's about how you are as a person and how you are as a trader. Your psychology is such a big influence to your decision making, and that's something that is often overlooked. And at Vertex, what we do is give what we call daily bedtime stories, right, for our students, where they can learn from the mistakes that I've made in the past. And there's, to be fair, some of the stories are a little bit well, I don't know if the students like it. Well, to be fair, I've had no bad comments, but yeah, you get bedtime stories from me if you join Vertex. But that's not the only reason why you should be joining anyway. But okay, let's jump into why I wanted to record this video. So actually, I don't even need a chart for this one. One of the new things that I've seen that's been spoken about is building a core, building a story. But how many of you actually know what that means? Because building a story isn't just about, for example, isn't just about top-down analysis where you find your higher time frame POI, you wait for price to get there, you understand your overall higher time frame bias, you understand market structure, you have the story of why you're going to take a long from here to here, for example, right? You have that story, but it's not really, the story isn't just that. There's a lot more to it. You have to understand what is actually going on in the market. The market is a very complex thing. It's not simple. It's not as simple as price going to A to B, right? And we all know that. This is very complex. All these movements that are happening, these are all complex moves, okay, and they all have a reason why they are happening. So building story isn't just about going from A to B, following a certain amount of rules. Yes, I trade rule based, but there's a story behind every single trade, and you have to understand why. And one of the things that I want to talk about is building a cause. Now, a cause is something that I've seen that's another thing that's being hyped about. I don't know where this hype has come from, to be fair, but how many people actually understand what that actually means. And the main thing in terms of cause is understanding liquidity. Now, as we know, let's start off with the basics of liquidity, right? So when we get a price that moves within this price action here, right? And let me draw a support. Since when was my boxes grey? I don't even remember doing that, you know. And let's draw some resistance. Okay, so understanding liquidity. Where is liquidity sitting at this point? Liquidity is sitting here. Oh, that's not a bad drawing, you know. And liquidity is sitting above here. Why? Okay, so let's talk about certain trading strategies at this point. You're going to have traders who are going to be buying at support, which is there, with their stop loss is going to be somewhere below here. And there's going to be people who are going to be selling. Let me make this smaller. There's going to be people who's going to be selling at resistance, right, with the stop loss above here. God knows wherever the TP is, wherever they put it. Okay. Not only that, if you think about, again, there's also breakout traders. What does that mean? There are people who are trading breakouts based off the support and resistance levels. So there will be short positions sitting here, so as in buy stops sitting here with a stop somewhere above there and the entry point, I don't know, somewhere there, okay, and the TP's here. But same thing going the other way, there's going to be buy stop traders, so breakout traders from here with their entries there, stop loss, I don't know, somewhere there, and the TP is going to be up there. Now, the way with our understanding of how price moves, for example, if we are in a bullish trend already, okay, we're expecting price to go bullish, right? So these support traders are also going to be expecting price to go bullish. But remember, liquidity has to be grabbed to fund the move, okay? That's the main thing that we need to think about is if, you know, everyone can't win in the market, okay, there has to be people losing, and if there's too many people winning, it's just not gonna work. There's no equilibrium in the market, which is why we get these pullbacks and then these continuations, right? Those pullbacks are basically grabbing liquidity and going, right? So in this situation, when you get this support and resistance, sorry, I did the wrong way around, support and resistance areas, right, it also can be seen as a consolidation area between there and there. Okay, what is that doing? It's enticing traders in. So if you talk about what's actually happening, say price action does this, say price action does this, sorry, there we go. If price action does this, what does that mean? Okay, what's actually happening? So these buyers who are buying off support, they've just been taken out. These breakout traders have just been taken out. Okay, these traders here, they've just been taken out who are selling off resistance. But what sometimes happens is, well, what does happen, and this is where we trade off, price comes back and then continues. Why does it come back? Because they need to mitigate the orders, yeah? But what happens here? These traders get taken out. All that liquidity has been grabbed, and now enough people have basically lost, so they can continue the move. Okay, the institutions can continue the move, and our entry point is going to be here. Why? Because it's based off the understanding that, you know, orders were placed to push price down. In this case, is grab liquidity from all the way down here, from all the traders that have lost out, and then it impulsed up. Then these breakout traders were also taken out, and then price came, mitigated their orders, so they've taken no loss, and now they can continue their move to the upside. And that's essentially what is happening in the market. So in terms of building a cause and building a story, this should be your main story. This is what drives the market, is liquidity. What drives the market is the fact that, you know, people need to lose, and people need to lose for people to win. Okay, that's essentially how the market works. As unethical as it sounds, everyone who enters the forex market should enter with that information. They should know that when you lose, that money goes to someone else. And when you win, you're just taking money off someone else, okay? If you can't handle that ethical situation, then maybe trading isn't for you, but I'm not going to get into that conversation. But in terms of building the story, this is where it comes, right? So this is one of many scenarios. Let's talk about another scenario. Let me get rid of that. Let's talk about when you get scenarios like this, Okay, what do you see here? Okay, what we can see is basically a double top. Also, it can be seen as a resistance area. When you see double tops, what does that mean? There is liquidity sitting above this. So, is there a reason for price to go up? Yes. Why? The reason for price to go up is basically to grab that liquidity, right? And it's probably going to do that and then continue. Price is going to grab that liquidity, and it has a cause for that bullish move. It has a cause for higher prices. That's the main thing that's basically that builds your story, is understanding, where does price actually need to go to? Okay, remember, liquidity is everything in the market. Remember the phrase, for someone to win, someone needs to lose. Just remember that. And that's the main thing that will build your story. And there's a good example that I've just oh gosh, bloody hell, Tans. Sorry. There's actually a good thing that I just had a glance at somewhere actually. Yeah, here. So for example, we formed these relative equal highs in this situation here. Does price have a reason to go up? Yes, it does. Price needs to take out all these traders, need to grab, I need to stop doing that, needs to grab the liquidity that is sitting above here, which it does. And then what happens? It mitigates the orders and then continues to higher prices. Okay, that is the story behind this trade. If you don't have that understanding and if you're taking a trade without the understanding that, where liquidity is being taken, then why are you taking the trade? You don't really have the overall story. In fact, you've got no story apart from the fact that you're following top-down analysis. Now, this is not something that it'll get to a point where you don't actively think about it. It's something that you just see and at first glance, and it should be something, it'll become something that's instinct, right? And building that instinct takes practice. So when you're first starting using smart money and start building your story, that should be something that you should be thinking about. Where does price need to go? Like, look at this. There is relative equal highs. What is sitting up there? Liquidity. So price has a reason to go up. Okay, think about it that way. But remember, for price to go up, they're pushing price up to grab the liquidity. Price will need to come down, but it also need to come back and mitigate. So that's already building a story before anything's even happened. So that's the way to think about it, is thinking, where does price need to go to create a move? Not saying that it always plays out like that, but that is essentially what it is in terms of building the story. Let's talk about one more situation. Let me use this because it's a bit more clearer. So in this situation, okay, as we spoke about before, we know that, let me use this. So we have breakout traders who are going to be placing sell stops below these lows. Okay, we know that. Let me put it there. Let's put it below this low. Okay, for example, in this situation, we've got sell stop traders. We also have buyers who are going to be buying on the next tap, okay, of the trend line. So actually, which I didn't even draw. Let's just draw a rough trend line like that. Okay, so they're going to be buying there, and say there's an EMA that's running, I don't know, okay, I really need to stop doing that. I need to slow myself down. Okay, so let's say there's an EMA sitting there. Okay, so let's see in this situation what happens. Sometimes you get price where it goes from here, it goes from there, and then it continues, then it goes this, and then it does that, carries on. So remember, when I say that when you get a break of structure, does that mean it's a change in trend? No, it doesn't. Why? Because it can just be a liquidity grab. So remember, in terms of building your story, when you get liquidity grabs, you know that the banks have been, the institutions have been active. Let's see what's happened in this situation. In this situation, these buyers were taken out instantly, right? They're gone. They've lost. Their money is ours. And these breakout traders, what's happened here? They've gone. Their money is also ours. Okay, the institutions have taken that liquidity, and now they've grabbed enough and they can continue price to go to the upside. However, they force price to come down here. What needs to happen? They need to mitigate their loss from the order blocks that are formed here. The reason why the order blocks is because they force price to come here. They've placed orders here, okay, to cause this price before this price went up, right? They caused price to come down before that up move. Okay, that's essentially why price needs to come mitigate, because they don't use any stop losses, so they need to mitigate their orders. Okay, so they're not taking a loss, and then they can continue. The markets are always in their favor. It's not in our favors. As retail traders, we're nothing. Okay, we're worthless in this situation. It's always against us. However, if we're following the footprints that they're leaving behind, we can trade very effectively and be quite precise with it. And this is essentially where the story comes from, is where is the liquidity, where is the money sitting there. So remember when I said about following the money, this is essentially following the money. You're following the liquidity, you're following where people are losing, which, as bad as it sounds, that's essentially what we are doing. So we're going to follow the footprints that have been left behind, and that is where liquidity is being grabbed. Right, so with that being said, think about it. Are you actually understanding what is going on? Now, one of the main things that you need to think about is when you see price that's sort of consolidating, right? What does that mean? So when you see, like, you had some really nice moves, doesn't matter what time frame you're looking at, even if this is the 1 minute, if you want to do 1 minute plays, which for some reason, again, it's the new hype. I mean, anyone could trade the 1 minute if you got set rules. I mean, our strategy works in the 1 minute, but it depends. For me personally, I'll mention it now. Like, for me personally, I didn't leave my full-time job to sit on the charts for full time. I mean, why? I enjoy my time. I enjoy my time with my loved ones, and that's the reason why I trade in a more relaxed manner. I don't want to do these 1 minute plays, but it can be done. It depends on how active you want to be. I prefer is wait for the higher time frame moves and just catching a big move and move on with my life. I'm not going to sit on the charts 9 to 5. Like, forget that. But anyway, I won't go too much into detail. But when you see prices doing this, right, it's moving sideways. What does that mean? Why is it not just continuing? Because there's not enough liquidity to fund this move up. So when you see this move, what is actually happening? There's accumulation of orders. Okay, they are waiting to grab enough liquidity before you get an impulse out of the range that's formed. Okay, when that's happened, retail traders like us, we didn't do that. How the heck can we produce this move? Who did that? The institutions. It doesn't matter what time frame doing. Okay, we know that there's a mitigation that needs to happen. We will go off. I don't know if you can hear the car outside. I've opened my window. It's a bit hot in there, but I don't know if you can hear that in the microphone. But I'll continue. But ignore that sound if you can hear it. But we know that they basically left a massive footprint behind, which is how our strategy works. And this is where our edge comes from. And this is also our story building. So when you see this accumulation that's forming here, this sort of consolidation period where price is just moving sideways, then suddenly you get a massive range. It's grabbed enough liquidity, right, to get that move. And now we're going to focus on the footprint that's being left behind to continue going. So in terms of building your story, you need to think about everything that's actually going on and understand it. If you're not understanding anything, like that I've discussed today, then you need to go over your trade plan and, try and fit this in somewhere, because without that, none of your trades will make sense. And this video is a follow-up to the last video I did about making sense. Actually, it wasn't the last video, it's the video before that. But you need to build that story, and that story comes from where is the money. So when I did the video about following the money, make sure you go back and watch that. You need to follow what is happening with the money. Now, I know that, as I said, I know I gave a rule-based approach to the free strategy, and I didn't really discuss it, but which is why I'm doing this video, because it's something that I do instinctively and I don't even realize. However, understanding liquidity is where you'll gain the understanding of where price is actually moving and why it's getting there. So as I mentioned in I think 2 videos before this, as I mentioned in the making sense video, just go back as I did. I broke down, I'm not going to do it again, but as I broke down in one of the videos, understand every single move that happens and try and build a story behind that. If you can do that, going back, and then all you have to do is on a live market forward test it. You don't have to take a trade, okay? And I don't expect you guys to start trading straight away using this, because it will take a while to perfect. You can't expect to pick this up straight away. Take your time, understand the reasons why. Once you understand the reasons why, your understanding of price delivery, your understanding of price as a whole will be so much more clearer, and your trades will make so much more sense. Don't rush into it. So be patient with yourself, be patient with your growth and your self-development. Take your time. But for now, I will leave you guys be, and I hope this video was useful, and I hope you guys can build a story behind every single trade that you take now. And I'll see you guys in the next video. If you like this video, make sure you press the like button and subscribe if you haven't already. And also, what was I going to mention? If you want to join our mentorship, feel free to join via our website. And also our bootcamp is on the February the 20th, 21st at 10 AM on both days, on a Saturday and Sunday, GMT. If you want to join that, feel free to join. The discount code is YT500, and that will give you £500 off the bootcamp. But for now, I will leave you guys be. As I said, let us know how you're getting on, and hopefully we'll see you guys in the community one day. But for now, take care.